Inflation has been the talk of Wall Street for months now. Is this CPI figure going to do a lot to change minds on either side of the quote-unquote transitory argument?
I don't think one print is going to make a difference. We've been in the camp that we believe inflation is here to stay. It's not so much going to be transitory. I mean, parts of it will be transitory, but others will not be. And we're in that camp. We don't think one data point is going to make a difference. With this new infrastructure plan bill that looks like it's going to go through, we've talked about that as the next leg up with inflation. If you look at commodities and how they moved yesterday, materials, all of this stuff, we believe is going to continue to be inflationary and really bode well for the commodity market.
So if that's the case, if the infrastructure bill is one of those kind of proximate causes of the next leg higher in inflation, which parts of the market are going to be the most impacted in terms of the overall investment landscape? Do we care so much about things like lumber and copper prices that we made such a big deal about over the last couple of months? They seem to have settled down a little bit now. Is it food costs? Is it my fuel costs? I just filled up this morning. What exactly is going to be the main focus commodity-wise for Wall Street?
I think it's all of the above. As investors, we believe in a balanced structure. We do have exposure to commodities within our portfolios, which is roughly 7.5%. It has grown now to about 8.5% to 9% within our portfolios. So we use commodities to balance our portfolios. Commodities, historically, when inflation rises, commodities do well. So if inflation is going to be the thought going forward, then you want to be in areas like that. When inflation rises, typically yields will rise. When yields rise, financials, you'll see energy and materials, industrials all do well. Dividend paying, quality type investment stocks, those are areas of the markets that will perform well. The 10-year Treasury yield is the number one thing in our view to look at to really get a sense of where markets are going forward, right? So if you look at the past couple of weeks, the yield double bottomed and all of a sudden started to move up higher. So when yields moved up higher, what did really well? Oil moved, cyclical stocks moved, value stocks moved, and growth didn't perform as well. So if inflation is going to rise, those are the areas that you want to be investing in.
How good, Phil, is the 10-year Treasury note yield at being that indicator for a macro or overall sense of the market? I mention this only because the chart that we just showed shows a pretty decent-sized medium-term downtrend in yields, which signals to a lot of people that inflationary fears are perhaps unjustified. Why would you want to see how could yields be so low at 1.1, 1.2, 1.3% if people feel as though inflation and growth is really going to take off? Meanwhile, you've gone up about 25 basis points in a couple of weeks here. What exactly is the bond market telling you?
So, Dom, you have to understand. So, March 30th was the peak in yield, right? It peaked at about 1.74%. And since then, it's gone down. The reason why it's gone down since then is we saw Delta variant peaked its head in Israel. They talked about lockdowns, the breakthroughs on the vaccines with Pfizer. So bond market said, hey, the economic growth recovery story may be slowing here. And in fact, you saw Delta variant come here and cause consumers to hold back. And yields have gone down ever since then. Now, investors are looking at and saying, you think about Dr. Scott Gottlieb on your show just a couple of days ago, talking about this could be the final act for COVID for 2021. So if investors look past the Delta variant and saying to themselves, hey, we could be close to peak with Delta variant, and that could be a reason why the bond market is starting to move higher in the very short term. And in the intermediate term, I agree with you.
Sure.
The trend is down, but overall, we believe the yield goes higher here, which would bode well for a lot of those stocks.